What's going on, ladies and gentlemen? Welcome back to the channel. I hope you guys are well. So in today's video, we're going to do a couple of things. We're going to take a look at the SPY, the Qs, the SMH. We're going to look at other wave counts and try to determine, for those of you who are wondering, if we're going to break out from here or if we're going to break down and what levels to watch for. All right, so before we dive into the analysis, you already know, subscribe to the channel, give this video a thumbs up, and most importantly, do not forget to hit that bell icon so you'll be notified when I upload the videos. So for the SPY here, guys, we're going to look at our bullish interpretation first. Okay, so before we do that, let's recap. Okay, we haven't done much ever since, you know, our highs here on December the 28th, but the correction started on November the 22nd for the bearish count, the bullish count, right? But if we want to be a little bit more technical, since September the 3rd, our recent high here, we haven't done a lot much, right? Because we are technically at those levels at the moment and we're hitting resistance, right? We broke above it ever so slightly, but formed this weird pattern, and now we're trying to break below. So let me turn on our bullish count labels and let's take a quick look at that. All right, so from our November the 22nd high, we made our W wave, 3-wave pullback into the X, all right, ABC to the Y. We started with this trend line, okay, which originated on January the 4th. It was then confirmed on January the 12th. We sold off, 3-wave pullback here to the third wave, which confirmed it again, retested it, sold off, 4th wave, and now we made a final fifth to the wave 1. We broke slightly above it. So this trend line that originated again on January the 4th is pretty important to keep our eyes open for. All right, we're currently trading below it. So what does that wave count look like, and what levels are we going to watch for this bullish count? So here it is, guys. So out of our January the 24th, we made our third wave, right? 1, 2, and 3, pull back into the 4th, all right, and then to the 5th of 1. We then sold off to find support anywhere between the 50% and the 618. The way I'm looking at this, guys, is this: I'm going to take you down to the 15-minute time frame. All right, it's just a little bit more clear. For the short term, I'm looking for resistance up towards the trendline resistance and anywhere between the 446 and the 448. As you guys know, today was a little bit of difficulty for the SPY to break above this zone, the $446 region. All right, you can clearly see that was all resistance throughout the entire day. So it is literally telling us it is in consolidation, perhaps on the wave B, or perhaps it's still an ongoing wave B. This is A, B, and C. All right, but we're going to call this as a because it's a 23.6% retracement of the wave A, so it's still in consolidation, still correcting this advance or this gap up. All right, so coming into tomorrow or next week, which, by the way, tomorrow we have the meeting minutes, which is pretty critical, guys, for you guys to look at, because we've been having two headlines so far that have been the driving force for this market: either geopolitical tensions between Russia and the West, and we've had the Federal Reserve interest rate hikes and inflation going on, which have been moving the market so far. So pretty tough market to start the year, if you know what I mean. So we may get a high. All right, we may get a high to retest this trend line. We may get a high to retest these two fib levels, which is the 51, which is the retracement of this wave A to the wave B. So keep your eyes open for 448.96 and 446.29. along with the trend line. Once we reach the zones, we are potentially going to see further downside to the wave C. Now, this whole wave count will be invalidated if we cross below 420.63. Okay, so again, guys, if I'm confusing you, please let me know down in the comment section what is it that you're confused about. All right, because the pattern, if you guys remember in my previous videos, I was showing you guys multiple counts, more than 2. I normally don't do that, but because this has been a bit tricky to track and label, I've found myself in a position where, you know, labeling this thing in different scenarios was the most ideal to keep me on check, okay, and to keep the guys at Trending Waves on check, or the gals. So 448 at the extreme, trendline resistance, and 446. These are 3 zones of confluence that I'm looking for, and then the wave C down of wave 2. Now 420 is our most critical level to watch, because that'll invalidate this whole wave 1. Again, this will be a wave 2 pullback. All right, this will probably serve as a good potential opportunity to get on board to the wave 3. Okay, what I said, because we're coming near invalidation. So it's a good level of risk. You'll put your stop or your risk tolerance right at or below 420.63. Okay, so let's take a look at the X wave count, okay, which is our bearish count. And in this count here, ladies and gentlemen, instead of looking at November the 22nd as our starting point for the correction, we're looking at the correction on January the 4th. Same deal, right? We have this trend line that has been acting as resistance in both wave counts. So A, B, and C of W, we have evidence of 3 waves up to the X wave. Now, why I'm still favoring this count, but it's not too likely at the moment, because we're going to take a look at other charts that are showing us evidence of the contrary, right? So we haven't technically made a high above the X wave, neither on the SPY, neither on the futures market, neither on the SPX. So for that matter, for that reason, we're holding this to still be a valid point in the SPY for our Elliott wave count. So the way we're looking at this is that this is 1, 2. We're in the makings of 3, so 4 is in the process, right? Then we get a final move down to the wave 3, pull back into the 4. All right, and then the final 5th wave to the A wave, at which point we'll get the 3-wave pullback into the B. So it'll be something like this, right? Once we find support here, 3-wave pullback into the B, wherever this is going to land. Obviously, we'll need to break this low to confirm this count. All right, so to tie all of this back with our bullish count, remember in our bullish count, okay, this is the wave 1. Sorry, our bullish count, this is the wave 1. We're looking for ABC into the 2. So we can't cross this, because if we cross this on our bullish count, then this becomes our main priority at the moment, all right, or at that point in time. So once we see this, obviously we may see further price action at least sub 400 on the SPY, all right, sub 400, guys, for this wave 4 pullback. All right, so let's take a quick look at, actually let me show you why. Let me show you the futures, right, on the S&P. So we haven't made, let's take a look here, the daily. So we barely there. However, we take a look at the Dow, right? And the Dow, we have evidence of a 5-wave move up there, right? I'm jumping between counts here, guys, but I'm just trying to make a point why I'm not favoring the X wave, because we have here evidence. The Dow has broken above this. It's wave 1. Okay, so that's why I'm not. So, and then we also have the XLK, for instance, the XLK, which is the technology sector over at the SPY. We have evidence of 5 waves up. All right, so guys, look, if you guys want wave counts for any chart that you guys are looking at, consider joining Trending Waves, right? We'll, we tie everything in together. We show you guys what counts we should be looking for. Always showing you guys two alternates, to help you guys and to guide you through your decisions, right? So going back to our main focus here, which is now going to the Qs. All right, let's take a look at our ending diagonal, our leading diagonal option here. All right, our leading diagonal option is still valid from an Elliott wave standpoint. Okay, so we have the 3, WXY to the 4. Now we're trying to find our wave 1 in the intermediate wave degree. All right, we have overlapping price action, which is valid from a leading diagonal standpoint. 1, 2, 3, ABC 4. So this count, guys, this count must remain above the wave 2. Wave 4 cannot go below this. All right, this cannot break this. So I have this as wave count invalidation. That's what WC stands for, wave count invalidation. If we end up rolling over and we break below this zone of wave count invalidation, then we have no choice but to start looking at our bearish count. But in this case, let's take a quick look at where we at. All right, let's go down to the 15-minute time frame. So far we have evidence of an uptrend, right? We have evidence of the makings of 5 waves, right? We have 1, 2, maybe this is the ongoing 3rd, 4th, and 5th for the wave A. All right, then we get the pullback in C and B, and then we get the final wave in C, right, to complete this 5th wave. So maybe this is the case. So I'm favoring the bullish scenario here, guys. I am genuinely favoring bullish scenario. It all depends on what happens tomorrow around 2 p.m. when the meeting minutes are released for the Federal Reserve. Okay, so hiding this one and taking a look at our bearish count, just like in the in the SPY, right? We haven't made a new high, so it's hard for me to believe that we are going to see further price action to the downside on the SPY and the Nasdaq. But we have other names that are heavy, you know, notable names that are heavy, making 5 ways up and breaking the highs from February the 2nd, or even for that matter, yeah, February the 2nd. All right, but you never know. So 3 waves to the X, 50% retracement, 369, 1 2 1 2 3 4 and 5. Again, this whole wave structure will be valid once we break below 338.08 and will be confirmed at 334.43. All right, guys, so keep your eyes open for this zone. All right, if we keep on heading on lower, otherwise a leading diagonal all the way up here. So you may be asking, how are we going to confirm this count? This count is going to get confirmed once we complete 5 ways up. We retrace in 3 for B, right? Something like this, like I've always taught you guys. So 5 waves up, 3 waves down, and then we go. So this zone is where we will probably find the B wave. Well, not this area, but that's what I'm looking at, right? For 3-wave pullback to take us to the upside to the wave C, at which point that might be a pretty short-term opportunity. Otherwise, we will wait for this wave 1 to complete. All right, we're going to get the wave 2 pullback in the intermediate degree. Okay, whichever this lands, right? The 3-wave pullback. And then our main priority is to try to track this wave 3. All right, guys, so I know it has been extremely tricky, but maybe tomorrow is the catalyst to let us know that this is the green light. Bells are rung, we out, let's go to the upside. All right, maybe tomorrow after the Federal Reserve meeting. All right, a lot of things have been getting priced in anyway, so maybe that might be the case. Maybe tomorrow is a little bit dovish. That's what I'm looking for. That's what I am aiming for. So if we miss this, right, because obviously the wave 5 has to go above the wave 3. If we miss this, right, because of however the pattern is going to play out, which is typically tough to try to catch, you know, an ending diagonal, I would rather much wait for this pullback, right, for this 3-wave pullback support, and then the big move is into wave 3. Once we see this, we'll take a retracement and we'll see where we'll take it from there. Let's take a look at the SMH. The SMH, ladies and gentlemen, let's go up to the 1 hour time frame. And here, you know, this is what I'm talking about, right? We've broken above our February 2nd high. So we have our wave 1, ABC to the 2. The 2 came in at an appropriate 1618 extension of wave A versus wave B. It's more clear here, A, B, and C. Wave 2 came in support at the 618 of the retracement of wave 1. And now, if I take you guys to the 5-minute time frame, we see that we have clear evidence of 5 waves in the upside. 1, 2, 3, 4, 5. Complete a 1. We get a 3-wave pullback into the 2. Right? 1, 2, and 3. Let's take a look, because that 5 wave is almost completed. So let's see here, 38.2, 23.6, turn to white here and here, and we may get a pullback down towards the $275, $272 region. All right, at which point we may be able to find the trade to take us to the 3rd wave of wave 3. The 3rd of a 3rd will be an ideal scenario for us to head on higher towards the $298 region. We get a pullback into the wave 4. Even maybe this goes up towards the 1618. Who knows? But we shall see, and we shall wait for this price action to unfold. 3-wave pullback support this zone, and that's it. All right, guys. So let's take a quick look at the Dow as I was showing you earlier. The futures here, the Dow. All right, so we have been respecting this 50% retracement. So out of our January the 24th, all right, 1, 2, 3, 4, 5, clear 5 ways up, 1 ABC to 2, or maybe the 2 is ongoing. All right, maybe this is the A, this is the B, and now we're gonna get the C. How will we know this? If we start to this is the 50% retracement. Okay, as you can clearly see, it's spot on, right? And we only have evidence so far of 3 waves, so 1, 2, and 3. If we start breaking lower tomorrow and we break above this high here of 34,636, let me label that here for you guys to take a look at. All right. Actually, sorry, it's here. My apologies, guys. So 1, 2, and 3 so far. All right. Then that's likely that this is the A, the B wave. So A, B, and C. All right. Otherwise, if we start heading on higher, we break this highs, then 1, 2, 3, 4, and 5 completes the wave 1 of wave 3. All right. Okay, guys. So that's pretty much it for me tonight. Let's see where Bitcoin is at. Bitcoin is making good moves, as I showed you guys last week, up about 4%. We are here at the Ethereum at 3,100, 6%, 7%. So, you know, even this is catching a bit crypto. All right, guys. So thank you so much for tuning in. If you guys have any questions, please leave your comments down below. I'd love to interact with you. Otherwise, join Trending Waves. It's pretty active in there. We trade the markets, we analyze them, we keep patient, and that's you know, we're trying to avoid any headaches out there, guys, because it's pretty complicated. It's pretty tough. All right. So yeah, hope to see you soon. Take care. Bye.